Gold is one of the worst investments out there.
Alright guys, so normally I like to take Sundays off and actually comment on somebody else's comment about my channel. But today I saw a very interesting video by Graham Stephan. And Graham Stephan, I do want to say I respect this guy. I'm a loyal subscriber to him. But he also stated a video that I just came across on saying that gold is one of the worst investments out there. Alright? And like I said, I respect this guy. I mean, come on. He has over 200,000 subscribers, so he has a pretty much good platform to talk to his audience versus someone like, let's say, me. But I just want to give my 2 cents in there, alright? So here you go, my 2 cents. And I just want to give you guys my thoughts on this video. Let's go.
Graham, what do you think of gold? Should I invest in gold? How much gold should I have? And honestly, unless you're talking about RuneScape, my answer is pretty much always the same. Gold is not an investment. I mean, sure, it's fine to buy gold if it's a part of a watch or maybe a piece of jewelry, but as an investment, the answer is no, 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 no. No, no. Gold is one of the worst investments out there.
Now, with this statement right there, I do believe it. I believe you can invest your money into so much other stuff and actually gain money if that's your goal. If that's your desired goal, then yes, there's plenty of other stuff that's way better than gold. As far as gold being in this investment, I don't see it as an investment at all. So I do agree with that. And I also stated that numerous of times on this channel, and this channel being a gold and silver channel.
And I will explain why gold is not the golden opportunity people think it is, and why this investment won't really pan out for many people.
Oh, Graham, I got one. You ready for it? How much a gram of gold is worth? Oh, that was a good one. No? All right, let's just keep going.
And if you like these golden puns, make sure to hit the like button. Gold has been around for quite some time. Even as far back as 40,000 BC, gold flakes were found in Paleolithic caves. See, there are other metals that have been used in jewelry and coins and a lot of other things that we use today, such as platinum, palladium, rhodium, iridium, obsidian, ruthenium. I might be saying one of those wrong.
Nah, you good, bruh. I don't even know how to say half of those myself.
And of course, are good old gold and silver. However, the problem with other metals is that they're extremely rare. So in order to use them in any large form, we're either going to have to mine a lot of it, which isn't really possible, or the coins themselves would have to be really, really small. They're also very difficult to extract from the earth, and they have very high melting points, which doesn't really bode well for creating a currency. So that leaves us with gold and silver, but silver tarnishes.
Yep, it does. Exhibit A.
Which leaves us with pretty much gold as the perfect metal to use. Unlike other metals, gold doesn't rust, it doesn't degrade, it doesn't tarnish, it's heavy, it's aesthetically pleasing to the eye, and it's moldable. And all the gold in the world would fit in a 20-meter cube. And there, we're gonna go to the year 1792 when Congress passed what's called the Mint and Coinage Act. This act established a fixed price for gold in terms of US dollars that basically valued 1 part gold to 15 parts of silver. Basically, gold was used for large denominations and then silver was used for smaller denominations. Now this practice continued, but in the mid-1800s, other countries wanted to standardize transactions in a booming world trade market. This is when the gold standard was really adopted. It basically guaranteed that the United States would redeem any amount of paper money for its equivalent value in gold. This meant that trade no longer had to be done with heavy gold bullion or coins, and that paper money actually increased the trust from one company to another, knowing that that was actually backed by physical gold. Immediately after exiting the gold standard, the demand for gold just skyrocketed, going from $35 an ounce in 1970 to $594.90 in 1980, which works out to be $1,924 in today's money, adjusted for inflation.
Alright, so I agree with everything he says. He's pretty much going over the history. I even agree with him saying gold is not the best investment. Now, what is it that I highly disagree with? Let's go into that.
But since then, prices and demand have dwindled. People didn't really see it as the golden opportunity they thought it was. And by 1997, it was trading for only $287 an ounce. It then later spiked to almost $2,000 an ounce in 2011, just as everything else was plunging in value. And right now, gold is hovering at about $1,200 an ounce. But how does this actually look from an investment standpoint? And is this even an investment to begin with? Since gold was a fairly fixed price prior to 1970, we can really only look back at the last 45 years or so of data, adjusted for inflation, to really determine its value. If we take the price in 1978, the gold was trading for $208 an ounce. We can reasonably determine that with inflation, that would be worth $838 in today's money. And as we all know, gold today is about $1,200 per ounce. This means that gold has gone up in value, adjusted for inflation, of 45%, get this, over the last 40 years. Now, just as a comparison here, the S&P 500 index went up in value 630% over that same time period, adjusted for inflation. So given that, over the last 40 years, gold has only gone up, on average, 1% annually, adjusted for inflation. 1%. Again, versus the S&P 500, which went up in value 5 times more during that same time period, also adjusted for inflation. So why do people even think that gold is an investment, or even worse, a hedge against inflation?
Now, see, this is the problem I have with it. Gold is a hedge against inflation. That's how we perceive it as. And I'm not saying that that's what it is. That's exactly how we see it as, all right? Now, let's just use the number that he stated on his video. In 1997, gold was about $200 an ounce. And right now, it's about $1,200. A little bit higher, but let's just say $1,200, all right? So back in 1997, $200, today's money, as far as inflation, it's $318.58. So let's say I was able to buy a whole bunch of ounces of gold back in 1997, which is like what, over a little bit over 20 years ago. The price of gold that I spent $200 for is now worth $1,200 today. So not only did my $200 retain its value, because right now $200 back in 1997 is actually $318.58 today, and the price of gold being at $1,200, there's actually an $881.40 profit. Now, I don't really care about the profit part. I'm just caring about the protecting my money from going down or being eaten up by inflation. Now, I totally agree with you. If I would put my money into stocks, yeah, it would be good. But I feel like he's using the point of 2011, people that were flooding into the market buying gold and silver in 2011. Now, I can say the same thing if people were buying stocks back in 2004, where stocks were as, close to its all-time highs at that point in time. If they started buying stocks around that time in 2007, they would have lost a lot of money as well. The same way you can say that with anything. It's just the right buying point. All right. If people are waiting to buy silver, if people are waiting to buy gold when it's already up and it's going all the way high and high and high, and that's when you decide to buy it, then of course I understand, yeah, you might get cut off. But if you're buying it when it's at its low points, like silver right now is way undervalued, about $15 an ounce. Now, back in 2011, where silver was almost close to $50 an ounce, if I was buying silver at $50 an ounce, then of course, I understand that I would have lost tons of money.
Remember that this is a metal, or investment as some people call it, that went down in value 80% from the year 1980 to 2001, over 20 years, before slowly creeping back up in price. Now, when you're looking at any sort of investment, we have to look at the factual data to determine whether or not you can actually make money in something. And historically speaking, gold is really factually one of the worst investments out there. Owning physical gold has so many disadvantages to it. The first one is that when you actually go and buy physical gold, the large spread between the bid and ask price ensures that you are immediately underwater on your so-called investment as soon as you actually buy it.
So pretty much what he's saying is the difference between premium price and spot price.
Then you also have the shipping cost for a very heavy metal that you have to include in your cost basis for owning the gold.
But then you can also buy at a local coin shop where you don't have to pay no shipping, or there's a lot of online bullion dealers that's offering free shipping for any orders over $100.
But then once FedEx delivers your terrible investment to your doorstep, you're gonna have to figure out how you're gonna actually store it. If you end up keeping your terrible gold investment at your house for safekeeping, you expose it to the risk of theft, damage, fire, natural disaster, and anything else that could happen to that physical gold that you have. Or if you decide, I'm going to take my terrible investment to a bank. Well, then guess what? You have to pay for a safety deposit box to store it. Or other companies will gladly charge you to hold your gold for you.
Now, there's no rebuttal for this part of the video. Like, he's 100% right. You're responsible for holding your precious metals at home. Now, for the latter of the situation he mentioned, in this community, not that much people are willing to actually let somebody hold their precious metal for them, because we have this famous saying in our community: if you don't hold it, then you don't own it. So we wouldn't technically go to a bank and let somebody else hold it for us. I'm not gonna lie, a lot of people may do that, but as far as this core community, the majority of us, we don't tend to do that.
So why do people ever consider this an investment or a hedge against inflation? And the reality is that it's neither. In fact, the real purpose of gold is a hedge against fear. The more people fear about inflation, economic collapse, or defaults, the higher the price that gold goes. The thought process here is that while paper currency can't be trusted, gold will actually retain its value. Now, I'm sure all of the doomsdayers out there who are promoting fear would also say that our paper currency right now is really backed by the faith of our US government. But let's be real here. The US Treasury security has never once defaulted on any sort of currency in our entire lifetimes.
But for the thousand, and I do mean the thousands of years that gold has a track record for, fiat currency has tons of examples of it going down to zero. Zimbabwe, Venezuela, there's a lot more. But there is one thing I do agree. Well, there's a whole bunch of stuff that Graham said on his video that I agree with. But there's one thing that he says that I 100% agree with on this one. I'm not someone that try to spread fear. My channel is like, I try to stick away from spreading fear on my channel. But there's one thing that Graham said on his video that makes sense. And that's this.
And if this were to hypothetically happen, the entire global financial system would be collapsing and the value of gold wouldn't really do much anyway. If anything, the value of probably rice and beans and canned food and water would be way more valuable than the price of a gold coin. So from the way I see it, that entire argument just doesn't really make any sense. So anyway, moral of the story here, but the prices of gold are usually tied to our fear of economic collapse, whether or not it's actually warranted. After its peak in 2011, which was the best time to buy pretty much anything else in the markets, gold was at its very highest point and has seen a slow decline since then. And this brings us to Warren Buffett's golden rule: be greedy when others are fearful. And all the fearful people in 2011 were buying gold.
Great ending, but I do think that the saying was a bit skewed up just at the end right there. I do believe it's be greedy when everybody else is fearful and be fearful when everybody else is greedy. And a lot of people back in 2011 was being greedy because they was buying a whole bunch of gold and silver up. And that was the great time to say, you know, buy stocks. Let's buy stocks. You would have had some amazing returns. All right. But right now, maybe, just saying, maybe, I'm not saying this is fact or not, but maybe, you know, gold is undervalued. Not that much people are greedy on silver and gold. So maybe we should all be greedy with silver and gold now. So by the off chance that Graham ended up seeing this video, I do want you to know I did not do this out of disrespect. I 100% respect your argument here. Just hopefully you get to 100% respect mine. So we don't have to see eye to eye, but the respect is there.